Hey, it's Soleil, and this is episode 224 of the Orange Pill Investor. And Friday is roll day, so let's get busy. So the 133 calls that I sold last Friday morning immediately got wrecked. I think it went to 143 by close, and then it dipped, and then um, it would have been cool if I had bought these back on the dip, but I just let it ride. And I didn't really think much would happen with the rate cut, but maybe some folks were surprised that it was 50 instead of a 25. And so I was definitely wrong. I thought maybe the stock would just do nothing, or with a 25 cut, maybe it would even dip a little bit with some disappointment. Um, but the market is so irrational; it could have even been spooked by a 50 0.5 cut. So you just never know. So I'll take the L on that one. I thought the uh, I thought the cut was completely baked in, but I will say that I don't think that as forward looking as the market is, I don't think the S&P 500 inclusion is baked in to MicroStrategy's price. So I think it's a little bit of a ticking time bomb when that at some point the market's going to be like, oh, this is going to happen. So I'm still front running, trying to front run that and load up on positions, but I think my accumulation phase may be nearing its end. So I will probably sell covered calls this week. Those will expire on the 27th. And at that point, I will probably either stop selling covered calls aggressively, and I'll start baking more call away value into them, or I will only sell covered calls after a pump, and then I'll just leave them uncovered until a rally, happens, which isn't going to work if the number goes down. But it does seem like um, I may have gotten away with a lot of accumulation without getting punished too badly, like this one. So I'm losing $500 a pop on these 33 strike calls, but I'll be able to roll them for next week for another 500. So basically breaking even and kind of just kicking the can down the road. So I think that's what I'm going to do for now. So let's go ahead and just close all of these. I don't want to pay full price for it. So let's see. So my buying power is going to go down from 44 to a little under 20. All right. And let's sell some covered calls for next week. And let's do this a little. Let's split this up. I'm going to do 20. That's for today. That's bad. There we go. All right. Recoup a little bit of buying power there. And let's take the other 300 shares and do a 45 days to expiration. Let's do 42. And I'm going to go let's go 20% out of the money. That would be 140 times 2. So $28. 170. Let's look at 170. Can collect the 2 grand here. So mixing up the strategies a little bit. And let's just check and see. So I've got 2300 delta. And what I said that I wanted was at least 50 per 100 uncovered. So I would need 1150 in uncovered delta here. And I've got 1180. I may come back to this and try to add a few long calls here just to round it out. But let's go ahead and roll this Tesla call. The 235 strikes did not get completely wrecked. I got paid $500, which puts my break even at 240. So this didn't work out too bad. But again, I'm going to go pretty close to at the money. I'm just going to go right here at the 240. Try to collect $100 or so here. Okay, that filled. Good deal. I used a bunch of buying power just to roll these calls. So I'm not going to add too many positions. Besides that, the price of MicroStrategy is up a bit, at least on recent historical prices. So maybe let's just add like 3 of these. Get me to a nice round number here. Then again, that only cost me what? It's only going to cost me about $300. Maybe we'll just get to a nice round 80. How about that? I feel like this is accumulating MicroStrategy is got a borderline on becoming an addiction. All right, let's pay a little more. All right, and so I posted about it yesterday, but I have borrowed a considerable amount of money. Let's see. The car loan I haven't received yet, but I'll be paying about $200 a month for that. So some of these covered call are kind of necessary when people say, "Oh, why are you limiting your upside?" Well, some of it is necessary in order to pay the payment on the loans themselves. So the other way I could do it would be to just, you know, if I borrowed 14 grand, I could just buy 100 shares, and then if the monthly payment was 250, then I could just sell 2 shares, and then I'd have 98. And then over the course of the next year, if this pumps, 5x, then I could just sell half, pay off the loan completely, and keep the difference. But I like the idea of generating cash to cover the payment. All right, so I like this. OCD is satisfied. I got a nice round 80 here, got a 20 here. This is 1300 of uncovered delta. I don't want this video to get too long and get mixed up with the tutorial stuff. So I'm going to do a completely separate video on the poor man's covered calls. And then I'll add that to the mega thread. I've got several that I'm going to have to deal with in the IRA account. But let's just make sure before I move on, I got 2,300 shares. I have 20 at the money covered calls. I've got 3 out of the money 42 DTE covered calls. Those have some upside built in, but you collect much less premium. You collect a little bit more immediately, but then I should only be able to collect about a quarter of this per week. Rolled Tesla, so good to go there. All right, let's move on to the IRA. I am going to have to do some creative transactions here, I think. So these are 28-day. I don't really need to deal with these for another week. And let's just see if this needs to be managed. So it's a 140 strike. It's been breached to 145, which means that there's $5 of intrinsic value here. Its total value is about 1,500. So the total value minus the intrinsic value equals the extrinsic value. The extrinsic value is the amount that I could collect by allowing this to go to expiration. So the 1,500 minus the 500 intrinsic leaves about $1,000 of extrinsic value, which is practically the same amount of intrinsic value as I had when I opened up this trade a week and a half ago. So to me, there's plenty of extrinsic value to collect here. I do not feel any urgency to deal with this, except I'd be rolling it out about 17 days. And if I did, let's see, let's roll expirations out to 11/1. That's 2 weeks, right? If I do that, and what strikes would I have to pick? So I've got the 100 strikes. So if I pick the 180 or the 170, 170 minus 100 is 70, and 70 plus the premium paid would have to be more than the value of this. And the value is about 60. So I could actually get way more aggressive with this. But really, it looks like I would just be rolling to break even. I would just be rolling out just to, I'd be rolling up to a higher strike and breaking even on the trade price, but I would actually end up having to pay for that. So that's counterproductive. What I'm really trying to do is hopefully generate a little bit of premium so that I can even pay to just roll these bad boys. So let's take a look at these. If I roll these 160s out, same strike here, 100. And the value on these 100s is a little about 73. So if I try to roll these expirations out to 42 days, shit, what did I say it was worth? 73. So the difference between the strikes, between this strike and the 100, plus this premium has to be greater than 73. So I could pretty much roll out to here for a tiny credit at the same strike. But I probably would need to go here to stay within the parameters, because 165 minus the 100 strike of the long call is 65. 65 plus the 9 is 174. So that's just covers the price of the long call. But that's not really going to free up a whole lot of premium. So I think I'll let these ride one more week and then roll them when they're down to, around 21 days to expiration. All right, so if I'm not going to do anything with these long calls, the only way for me to free up any money would be if I sell any of these poor man's covered calls, would be if I were to peel off some of my long calls here. And that would be at a slight loss, but let's see what it's going to take to roll these expirations. Okay, clear the order. How much money am I going to need for this? Even if I roll to pretty close to at the money, 3 of them is going to be $2,100, $2,200. So, what if I rolled them? All right, I've got that. Let's see if I rolled these to 42 days. In order to collect 1,300 and not have to pay, I'm basically going to have to go here. I don't love it, but I don't hate it either. So I'm baking a tiny little bit of call away value in here, like what, 2-3%. But I'm rolling out and up and not having to really pay too much. We'll see if this fills 3 times. Ooh, that's not going to cut it. I need a little bit more. I need just a little bit more. 3 times 40 is going to be like $120. Annoying. You know what? Oh, yeah, that just occurred to me. This one that I'm doing here isn't even a leaps, and it is in profit. So I paid 52 for it, and it's worth 56 something. So how about I just close this thing, this position? For a little bit of a credit. And that gives me some cash. Let's see if that's enough cash to just roll these expirations to 1 week. And let's Gonna be try to be greedy in September and then flip this around. Getting ready for October. All right, so that brings me down to about 2 grand of buying power. 10 shares would get me to let's see, that would spend about 1440 of that. However, one of these calls is cheaper than that. So let's go ahead and just buy one. Top of the chain. Boom. All right. $380 remaining. I can get 2 shares. Cool. IRA is done. 300 shares. 3 at the money covered calls for next week. And 3 160 strike covered calls. If I do roll this out, that would take me from 28 to 42 days to expiration. Nah, I'll sit on these for another week and then decide what to do right before October. Actually, I may take a look at them on Tuesday because Tuesday, if I roll these out, it would put me to exactly 45 DTE. So I may need to start having 2 roll days a week for my out of the money options. I may turn Tuesday into roll day, and Friday can continue to be roll day for weeklies. All right, let's take a look at the joint account. I've still got this CLSK uh, debit spread that I set up. I paid like 30 for this. So I'm trying to collect 60. It's still only worth 21. So gonna need a significant pump for this to actually execute. But there's 182 days left on this trade. So not in any type of hurry or rush here. 100 shares of MicroStrategy. These were assigned when I sold the 144 puts. I sold I, I sold I think I had sold a covered call against this before. But I forget how much I forget what I think I must have gotten paid at least $500 for this. So my cost basis is definitely below 140. And then collecting this 800 brought my cost basis down to 132. So that's why I felt comfortable selling this 132 call, which is now in the money. Somewhat annoying, I suppose, but not the end of the world. 35, 35 days to expiration. I can sit on this. No need to deal with it yet. Oh, that's right. I decided to go ahead and sell a put credit spread. So this is still out there. I believe I sold it for 40. So I want to buy it back for 20. Nothing to do here. We'll just wait for MicroStrategy to pump or not. Been accumulating some long calls. So let's go ahead and add one more and try to dollar cost average this down a little bit. In anticipation of good things to come. All right, cool. Let's just double check. Nothing to do with CLSK. 100 shares. One covered call. Put credit spread that has my position closing already set. Added a long call position. Oh, I forgot I had actually added. That's right. I had these Februaries. I added one in April, and I have one in December. So I've got 136 and 68. So about 200 uncovered delta here, which is way more than 50 per 100 that I said I was going for. So I'm way longer in this account than the main account, which is not a problem. Quick note about that, not financial advice, but these long calls in a quote unquote normal environment, I generally don't like long calls or leaps to be more than 10%, maybe 20% of the portfolio. And in this case, it's like it's like half. So um, that is definitely not normal. But if Bitcoin cycle holds, MicroStrategy should should see some serious upwards movement over the next 6 to 12 months. So that is what I am banking on. All right, the 5K account. Thank goodness. barely struggling to keep my head above water and keep it under 5K here. I think I just have this one. I rolled everything else out to October 18th. So I can wait another week on that one. But the CLSK 10.5 call, we'll close that, pay $1. And let's just check cost basis real quick. I think it's going to be pretty high. Yeah, average cost. So that's why I went and sold one of the 200 share covered calls out to 45 days. But I thought I would go ahead and just sell under my cost basis in the other one and run both strategies at the same time. All right, to collect about 1%, if I try to get that, I can almost get it at 10.5. So let's get 1.5% at 10. If CLSK just rockets upward, then this strike will get completely wrecked and these will end up getting called away below my cost basis. But that is the risk I am willing to take to collect some premium every week. And I've just reduced my cost basis by another 15 cents. All right, so I rolled this out to 927. These 1018s don't need to deal with right now. It's like 38 days. No, 28 days, excuse me. So I can let these go down to 21. No problem there. Another credit spread I set up, nothing to do there. I've got these long calls. I would love nothing more than to keep adding some positions here, but with precious little buying power, this is a lie. If you saw it flash across the screen when I was trying to place that other call, buying power is like under 600 bucks. So I'm about as margined as I feel comfortable being in this account. So that is it. All right. Be good, y'all.